Okay, a lesson spoon feeding today, guys. We got AAVE. AAVE had a beautiful Model 1 Wyckoff accumulation, and then it even had a re-entry, and I got both. I got this Model 1 after the breakup structure and this re-entry possibility because we mitigated extreme demand right there. I was saying a pullback into the refined demand, which was mapped out. AAVE Trade stop loss can be trilled risk-free. Alright, I will go over it. I will explain it. I will go back in time because in a high time frame you can see we're leaving liquidity behind and we were trying to form a PO3 right there. I was watching that, but it didn't happen. We just had a deviation, and right now there's very obvious demand right there, which we came into at our tap 2. We didn't form a very good Bojan low, which means we can look for a Model 1. And what did we get there? We got more refined demand because on the 1 hour we had this 1 hour less bearish candle before going up, aggressively leaving an inefficiency, which the market makers want to fill. All right, we got our second tap right there. This is the deviation of your first tap, so that is going to be your second tap, and Wyckoff has 3 taps, so we're watching for or a Model 2 or a Model 1. In this case, a Model 1, because we wanted to go into that 1 hour demand zone. And what did we see is that we deviated this and went higher, and I'm going to show you when I play it right now, because when I play it, you can see we went lower. We came perfectly in that 1 hour demand POI, and there you had your break of structure. On a low time frame, on a 10-minute time frame, you can see you had some structure right there. When you go on an even lower time frame, is that more risky? Yes. Did I take it? No, because it was more risky. Like, you already had a break of structure right there for an insane RR trade, which is totally valid, but it's just more risky. This was a 3 or 5 minute break of structure, but it was just more risky. What does the volume profile say? Because when you're outside the volume profile, it's also a less good of a trade. So let's see what the volume profile is saying, and the volume profile was very high. So that makes another reason to wait for this structure break. Because the structure break I would take is this trade, because this is back inside the volume profile as well. It makes it for a better R, because if you're entering on the close right there, stop goes below the low, and your target is the range high, you have a 3RR trade, an amazing trade, leaving a lot of liquidity behind on the upside, and you're in the volume profile as well. So let's extend this range, and this could be a valid trade already. All right, but what did we get there? We formed some refined demand there. Well, what I was saying in the beginning is that we have refined demand there, and we have this block right there. You move up, you move down before going up, leaving a big inefficiency. Boom. And that was what I told you guys. Wait for this demand to get mitigated and wait for a break of structure. You're already in a Model 1. Let's connect the dots. And then you see you're already in a confirmed Model 1 with your stop loss here if you entered there. But if you didn't, there's a re-entry possibility. So we are waiting for the demand to be touched. And there we see the demand being touched. And you can even refine it more to only take this on a low time frame, that is this, and then you can see you are breaking structure in a minute, because when I play it, you can see that our structure break is going to be here. This is our structure break, and you're leaving liquidity behind because this is liquidity, so you're leaving this local return zone behind, and then you can see what did you do? You broke structure. But not there, and that was very interesting, because what do? You wait for the close. You always wait for the close, because price went lower and went up again. So this is an SFP, and it indeed closed above, but when we look on the 2 minute, it didn't. And this is a valid 2 minute break of structure, a 2 minute market structure, is it? So you're waiting for a 2 minute close, and you didn't have the 2 minute close. You wicked it, break of structure after the wick. So this is going to be your break of structure. This is going to be your entry. This is going to be your RR, because this RR is insane. Your stop goes below this low, because if you take out this low, you will take out that low, and you're targeting the range high. This is all pre-planned exactly, and from this level, from this tiny level, because you're already in a Model 1. All right, so you're targeting the range high for 7.7 RRs. It's actually insane. And then price is indeed going higher, and then you see you had a retest there. After a retest, you could throw a stop below the retest, risking almost nothing. This is almost a de-risk trade, guys. So this trade is amazing from a Model 1 perspective. This trade is amazing for a Model 1 going over into a Model 2 perspective, which is already de-risked. When you see it going up right there, you're already up to RR, and it looks a bit distributive. So are you gonna watch for a distribution here? Yes, to maybe hedge it, or to maybe TP. It takes some TP to be totally risk-free because this is distributive behavior. Are you gonna stick to your plan? Yes, of course. If you enter right here, are you gonna stick to your plan? Then you throw your stop loss as well to there, which is also almost risk-free. So this is an amazing trade, an amazing setup, which is hopefully gonna take our target. If not, I'm happy to lose in this setup. See you in the next video, guys. Ciao, ciao.